All right, we are ready to get started. Welcome everybody to Coffee with Markus. Today is April 28th, and it is what? Day 47 of these crazy markets. And today, something really important happened in the markets today, and we'll talk about this. Plus, I want to show you how I develop a trading strategy, how I go from idea to a trading strategy that I then trade in my accounts. Does that sound good? So let's get started and let's see what is happening here in the markets. So first of all, the Dow is up 2.5% today. And this is what happened today. This is why I think it has significance. Today we broke through the resistance level at 24,250. Why? What is happening? Well, let's take a look at the economic calendar. And you know that yesterday we had a little bit of problems here with the live video. So let me know if it is okay today. If it is, do me a favor. Click on like really quick before we move on. Just because I'm a little bit paranoid right now since yesterday YouTube was fooling me a little bit. But if you're good today, then yay. Okay. So the economic report for today. Today we had a lot on the docket. Advanced GDP, so the gross domestic product. And it came in worse than expected. We thought it would be minus 4%. It came in at a negative 4.8%. So the economy is retracting by 4.8%. Pending home sales came in at minus 20.8%. And you see, they expected minus 13.3. So also worse than expected, and yet the markets are rallying. So how is this making sense? And this is why I call these markets the crazy markets, because they are crazy for sure. So what's happening? Well, the news today is from Gilead. Gilead, as you know, recently was in the news where they said, well, you know what? We might have a possible treatment for this nasty virus that is going on. And then it said, oh, no. This report was being released too early. And then again, well, no, it's kind of true. We do believe that there is a treatment. And this is why the markets are rallying, because until now, there was no treatment. There's no vaccine. And when it comes to vaccines, rumor has it that we might not even have vaccines in autumn and fall when it might kick in again. Anyhow, so looking at the economic reports, what's happening there, this is where everybody says, who cares? Right, because we already know that we have record unemployment right now. We are in uncharted territory. We never had anything like this. So the GDP, we knew that our gross domestic product would go down. I mean, they said minus 4%, but who knows? Again, this is something new. As you know, we shut down the whole world, not only the United States economy, the whole world is shut down. Plus, we had the perfect storm here with crude oil. As you know, Saudi Arabia and Russia got into a war, into an oil war, sending crude oil prices down, and then this crisis here, of course, did not help at all. So this is what's been happening. So let's see, how is crude oil doing today? Well, bouncing up a little bit, so up 24%. And you say, 24%, that's great. Well, it's easy if you're only up $3, and that's already 24%, right? You remember when oil was still trading at $30 or $40? This move was less than 1%. But anyhow, hey, the markets are happy, and we also see companies reporting earnings, and the earnings are good. So today we had Boeing reporting earnings, and you see Boeing is jumping 5.9%. Who else reported earnings today? Oh, Google reported yesterday after the bell. So Google, here we go, Alphabet Inc., and today up 10%. And this is where last week, pretty much Snapchat set the pace, where they said, well, you know what, our ad revenue are not too bad. And Google reported pretty much the same. So Alphabet, as you know, is the parent company of Google. So there's a few other companies in there. Anyhow, I think 95% of Alphabet's revenue is coming from Google, and 99% from Google's revenue, no doubt, coming from ads. And apparently that's better than expected. So this is why Google today is jumping 10%. So this is what is going on in the markets. Can you believe it? So yeah, Benito says, what an exciting morning playing the market. Absolutely. So as you know, we did the Theta class live here this morning. we entered into a position that shortly after we entered it, got into trouble. So we'll see where we end today. I'll definitely follow up there tomorrow. But for today, because I promised that I want to show you how I go from trading idea to trading strategy. How does my mind work? Since I promised you to do this, I want to do that, and then tomorrow we can probably follow up on the Hertz trade that we did this morning. And shortly after we entered it, it didn't go well, didn't go the right way. So I'll show you exactly how to defend it. But right now, there's nothing to do yet. Otherwise, I would definitely share it with you. All right. Now, one more announcement before we jump into generating trading strategies. I mentioned it yesterday, and I also send you an email this morning that the PowerX strategy is now available since today for the first time ever on Kindle. And we are running a special for $1.99. So this will go up to $4.99 on Saturday. And the reason is simply because Amazon only allows us to run a special for 3 days. Anyhow, you see it in the comments probably. If you go to rockwelltrading.com/Kindle, it redirects you to Amazon. You guys are awesome. So for those of you who already got this ebook on the Kindle, you made us in 24 hours the #1 new release in stock market investing. So very proud on this, and I want to thank you for this. This is why today I felt compelled to share an idea with you, a trading idea that I am working on that might be awesome or not good at all. So I want to show you my exact step-by-step approach of how I do this. All right, I just want to check in with the team. So we are good. It seems that we have no problems today with the no problems with the video, which is good. Fantastic. Okay, so let me come back to you full camera because this is where we'll probably cut out this little segment here of how I generate a trading idea, and it might actually be multiple videos. So we'll see. Probably it might be 2 or 3 videos. So, but we'll get started with this today. All right, so today I want to share with you how I generate trading ideas and how I then take these trading ideas and go from idea to trading strategy. So let's get started. And in order to show this to you, I want to bring on my handy dandy notebook so that I can share a few notes with you. So whenever I develop a new trading strategy or I'm thinking about a trading strategy, for me, it is a 4-step approach that I'm using here. First, I come up with an idea. I come up with a trading idea where I said, you know what? This might actually work. Then, of course, I have to test this idea and see, is this idea making sense at all? And I'm going to show you exactly how I test a trading idea. Step number 3, this is where now I need to have the exact rules. So once I come up with a rough idea, I start trading it with a really, really small size. So usually just a few shares, or here, what I'm working on right now is another option trading strategy. And actually, you inspired me to this strategy. So this is what I want to share with you today that I'm working on. Anyhow, at some point, the idea, I like to put it into very clear-cut rules so that I know exactly what to do so that this actually turns really from an idea into a strategy. And then step number 4, I like to develop tools around this because tools make my life as a trader easier. Now, you already know that I have several tools. For example, for the selling put options class, this strategy, that's where I have my put options calculator. For the PowerX strategy, I have the PowerX optimizer. So tools make it easier for me to help me making trading decisions. All right. So now let's talk about the trading idea that I have. And I'm jumping back here to the handy dandy notepad. Good. So here is my trading idea. As you know, recently I have been doing really, really well selling put options. This is where in 5 weeks I was able to grow a small account $25,000 account by 43%. So it grew into $36,000. I had 16 or 17 winning trades in a row. Right now, I might have a losing trade. We'll see how this ends. Anyhow, completely different subject. So I kind of started to like the idea of selling options. Now, when selling options, as we know, what we need is we need to have volatility. The volatility needs to be high. Why? When volatility is high, this is when we can get a lot of premium in options. So, volatility. You get the idea. I've got to correct this here. Yes, I can spell volatility, I guess. See, the minute you start writing in front of other people, all basic writing skills and math skills go out of the window. Did you know this? Anyhow, so as I'm recording it, we are still in crazy market conditions. The VIX has been high, but right now the VIX, the volatility index, is coming down. So this is where I was wondering, okay, where else do we have high volatility? And here's what came to mind. This is where I thought volatility is usually high for stocks around earnings, right? Because as you know, when a stock is ready to announce earnings, there's some uncertainty. And uncertainty, let me just write this down, uncertainty always leads to higher volatility. I'm abbreviating it now. Okay, so I thought, that might actually be a good idea. And then I thought recently I did really do well with selling puts. So how about that around earnings, when volatility is high, we do not only sell puts, but we sell calls and puts. And I know that many of you have been asking me around this and have said, okay, can we also sell calls? Because you have been enjoying watching me or maybe doing it yourself, selling puts. So this was the question here. And I thought, yeah, you know what? We could do this. Actually, when you sell calls and puts on the same stock, this is what we're calling trading a strangle. Okay, so this is the idea that I'm trading strangles around earnings. Why? So let's just continue this trading idea that you have a little bit of a background, and then we jump onto my trading platform and I show you what I've already been doing and what I'm planning to do going forward. How I go from, as we see here, idea to test to rules that we have a really specific strategy, and then how I develop the tools. So let's go back to the trading idea. And the trading idea that we have here is, you know what, actually, let's do this. Let's say it is selling strangles, so selling calls and puts around earnings. That is the idea. Okay, so the idea is that before a company announces earnings, uncertainty is high, and since uncertainty is high, volatility is high. And then right after earnings, geez, there we go. We should see a volatility crash, because now people know what a company came out with, and sometimes there's a reaction to it, but more often than not, there's not a reaction to it. And I will show you how I found this out. I was surprised. So because I found, let me just write this down here in a different color. Often there's no major reaction after earnings. Geez. So we want to take advantage of that. So this is the idea, and this is where I thought, okay, who is actually selling, who is actually buying options right before earnings? Well, this would be often institutions who want to hedge, who want to make sure that they're not getting caught on the wrong side of earnings. Okay, so let me ask you, thus far, just the general idea, is this making sense? If this is making sense thus far, do me a favor and give me a quick thumbs up so that I know that you're still with me, because I know that I'm going fairly quickly here. This is why I'll probably do more than one video. I don't want to stretch this out. I could probably talk about the same topic here for 2 hours, but I want to make sure that I'm going also at a fast pace. So if I'm going at the right pace, do me a favor, click the like button really quick if this general idea that I have here thus far is making sense. And then we go into how I'm testing the idea. Because again, step number one is having an idea. And this is my crazy idea because I love selling options when the volatility is high. So I believe that this might be a good idea. And maybe it is not. This is what we're going to find this out together. What do you say about this? We do this together. I want to show you exactly how I do this. So step number two, now we need to go to testing. So here is what I have been doing. So I want to share this with you really quick. So what I'm doing right now is I'm sharing my trading account because this week there were 3 companies that reported earnings: Starbucks, UPS, and Caterpillar. And so I actually sold a Strangle, just one. I told you, when testing, I'm going with a super small, the smallest contract size ever. But I don't think that you can really do a whole lot of testing on the computer. So especially with options, super difficult to back test options. This is why I put on a few trades. And as you can see right now on these 3 trades, I'm up $185. I put these trades on Monday. Today, as I'm recording it, it's Wednesday. So in only 3 days, I made $185. Now you might say, that's nothing. But you see, this is the margin that I needed for this. The money that I needed was $5,400. So if you do the math, that is 3% in 3 days. That's 1% a day. If I could keep that up, making 1% a day, that would be more than 200% in a year. So you would more than double your account in a year. I like that idea. So let me actually show you exactly what I'm doing, what my idea is. Again, today we're just going in broad strokes so that you get the general idea. And then probably in the next video, we're going to refine that idea. Okay. So I want to actually pick a few stocks that are reporting earnings in the next few days. So one of the stocks that is reporting earnings in the next few days is United Airlines. So United Airlines, as you can see, oh my gosh, they are reporting earnings tomorrow. So I believe that today there's some pretty high volatility and that this volatility gets sucked out of it tomorrow. So let's take a look at United Airlines. And here's what I'm looking for. I'm opening up my option window. And the deal is, I don't want to be in this trade for long. So since they're reporting earnings tomorrow, I'm actually fine choosing expiration where we expire in only 2 days from now. Now, by the way, keep in mind that right now I'm just showing you the idea. I don't have the specific rules yet, but here's my idea. It is right now trading at $31. So the idea is that I'm selling deep out of the money puts and calls. So here, for example, with a delta of 0.67, so that's a 90% probability of success. Can actually go to 27. That's more than a 10-15% move. Let's try this. Let's just see if we could get enough premium here. So I would try to sell this one. And again, right now, I don't have the exact rules yet. I don't have the exact rules, but I will at some point after I'm testing that the idea is valid, have the rules. So, and I want to sell a call above the current strike price. And I'm looking here for a delta of, that actually might make sense. So maybe 37. Let's see, what do we have here? Maybe this one, 36, does look good. So let's do this. No, I actually wanted to go to a strategy build out. Let me do this one more time. And again, as you can see, you're right now looking over my shoulder. So as you can see, this is not scripted, but I'm showing you exactly what I would be looking at. So I would sell this one, 36 probably, and then also looking here at the delta, maybe selling a 27. Okay, let's just see. So the 36 and the 27, let's just go back to this here, and let's mark this on the chart and talk about where exactly would this be. So we talked about 36, right? Right here. Well, this was supposed to be a horizontal line. It doesn't look too impressive. Let me actually draw a different line. There we go. A horizontal line. So 36 right here and 27. So the idea here is that if United is reporting earnings tomorrow, that they stay for the next 2 days in this range. So is this possible? Well, let's just ask one of our tools, and one of the tools is built into your trading platform, whatever trading platform you use there. It is possible to generate a profile. It came up here on the other screen. So let me see how I can bring this over to this screen so that you can see it here as well. There we go. So it shows me a risk profile. Apparently, there we go. Okay. Where I'm selling a call and I'm selling a put, and you see I would make $56 in 2 days. So tomorrow, if it stays right in between there, and the probability of success is 80%. There's an 80% probability that the strategy will result in a profit. That does not sound too bad, because you see, for one contract, the margin impact is only 368%. So this means that I can make here in 2 days 10% based on my margin. Wow, that's pretty sweet. Seems that we could be even less aggressive and choose strike prices a little bit out of the money here. But you see, this is the general idea. So I want to show you another example that I looked at. Would you like to see another example? If you would like to see another example, do me a favor and right now just click on like really quick. Then I'll be happy to show you a second example so that you see what I'm looking at. I'm looking at super high probability trades, and I'll bring up a second example. So do me a favor, click on like right now if you're enjoying this. Okay, good, thank you. All right, let's actually take a look at another stock that is reporting earnings pretty soon. So there's a stock called Qualcomm. Qualcomm, you might have heard about them. So Qualcomm are reporting earnings, even today. All right, good. It seems that today after the bell, Qualcomm is reporting earnings. Good. Let's see what we could do here with Qualcomm. And again, all we want to see is there a possibility to make some money over the next 2 days? So same here. I see that I have options that expire in just 2 days from now, and they're reporting earnings this afternoon. So the idea is that they're staying within a certain range within the next 2 days. I mean, is it risky? I don't think so, because if you look at Qualcomm, Qualcomm, let's take a look at this. Whenever Qualcomm reported earnings, you see right here, they reported earnings. Where were they the next day? Right there. They didn't move a whole lot. So let's take a look at another one. Here, they reported earnings. Okay, here they jumped up, but then they stayed within the range. How much did they jump up here? From 84 to 89, 5%. That's not a whole lot. It looks massive, but it's only 5%. Let's go back and see here. Okay, you see earnings. They reported earnings here from 73 the next day to 71. How much is this? $2 on a $70 stock. That's nothing. That's like 1% or 2% or something like this. Again, all basic math goes out of the window. And oh yeah, I'm sorry, I just noticed that I was not showing the desktop. Thank you. Share the screen. Thank you for letting me know. Okay, we magically edit this in later on. Anyhow, so here you can see here it was jumping from 73 to 71, not a whole lot. Before this, during earnings, they were jumping 5% up, but then they stayed here. So they were not running away like Google, for example, with 10%. Okay, so we're sharing the screen right now. Thank you so much for letting me know that I forgot to do this. And here are earnings. You see, this were the last earnings. We pretty much the next day were right there. Okay, so here the idea is that probably also when they report earnings after the bell, that they won't jump a whole lot. So let's see what we can get here for Qualcomm. Okay, bring up Qualcomm, and right now they're trading at 78. So I'm looking for a strike price below. Let's just say if we could go with 72. So this would be $6. That's almost a 10% move. It's like an 8% move. Now we can even be less aggressive. Let's do 71. So 71, we go. Okay, we try to do this. And with the 71, we can probably get 70 cents. And let's also go to the upside, $6. So we would go to the 85. So let's do this here. And again, I want to show you the risk profile. And I need to do some magic here so that it comes over to the other screen. It's a little bit tricky, but we can manage. We can do this so that you see exactly the margin impact and that you also see the probability. I think as I'm recording this, the markets are closing. So this is why it doesn't show it right now. Let me see if I can quickly hit refresh. So I'm recording this going into the close. Probably doesn't show it here. But again, the margin impact here is $1,000. And I would probably get on this one. Let's see. We had 25, 50 cents. So not as good as the previous example. Now, if you look at 71 and 85, so here is what could happen to Qualcomm in the next 2 days. We go up to 85 and what was the other one? 71. So if Qualcomm would stay within this range over the next 2 days, we can collect $50. $50 in 2 days. And again, this is where I would trade size. I would probably trade 20 so that I can collect $1,000 in 2 days. And I don't know about you, but this sounds pretty sweet. So take a look at this chart. Is it likely that Qualcomm might stay within these two, within 80 to 71 and 85 over the next 2 days? I believe that this is very possible. Anyhow, so we will follow up more on this. Let me just arrange a few things here on the screen really quick. Okay. But basically, what I wanted to show you right now in this first video. So this is only the first probably out of 2 or 3 videos that I do around this. So right now, I wanted to show you how I go from an idea over testing the ideas to the rules. So please, right now, when you write a comment, don't ask me, okay, what are the rules? They're not there yet. I haven't developed them. I'm just sharing right now a trading idea. And the trading idea is based on selling options. So this is the idea here that right before earnings, volatility is high because uncertainty is high, and that after earnings, volatility plunges. And again, this is where you have seen I was able over the last 3 days to make 3% based on an account which is not a margin account, just a regular account. With margin, it would probably be, I don't know, 2 or 3% a day, which is amazing, right? So we are right now here at the idea, and I'm still in the testing phase. And if you're enjoying this video and would like to follow what happens, I will do some more testing here over the next few days. We can probably put some trades on together so that you see I'm doing it with super small size so that you see how this works out. And honestly, I want to see that I actually catch a trade where I'm getting in trouble so that I can refine the rules and that I can also develop the tool. So if you enjoyed this video, and you would like to see other videos, click on subscribe here and hit the little notification bell. This way you get notified whenever I release a new video. And there's probably a few videos popping up on the screen right now. If you want to continue watching videos, just click on any of these videos that make the most sense to you. All right, hope this helps, and I'll see you in the next video. Good. This is the part that Asia is editing out. So I know, sorry about forgetting to share the screen. There's a lot going on, as you can see. So I have my handy dandy notebook here. I have one monitor here. I have another monitor there. The camera is over there. There's my switcher here that allows me to switch between sharing the desktop and not. So there's a lot going on. Sorry about this. Anyhow, that is a trading idea that I have right now that was inspired by you, because many of you asked, okay, how about if we sell calls? You have been showing us how to sell puts, love selling puts. And then you said, what about selling calls? And I thought, why don't we do this at the same time? So there's the idea. Stay tuned. Over the next few days, I will show you more of how I keep developing this idea, how I keep testing this idea until we get to the very specific rules. Because you have seen in these two examples, it looked to me that UAL was the better trade out of these two. But again, this is where I want to make sure that I have tools and rules that tell me exactly which of these two should I have taken. Okay, good. So Donna is asking, did you click on the bid price to sell an option? Yes, that's what you need to do. You need to click on the bid price because you're hitting the bid, right? Somebody's saying, I'm willing to pay X amount for this. And that's pretty much where you say, okay, I'm taking you up on this bet. All right, so let's see. Okay, Andre, so good to see you here. It says from Brazil. Fantastic. Have you already gotten the Kindle book? Okay, say fan of the book here. And I see a bunch of comments that you didn't see the screen. Yeah. John, what would I do if the company announces a delay in the earnings report? You know what? I think this would actually be better. John, as you can see, I have a super short fuse here. 2 days. I mean, the trades that I entered on Monday, they had a fuse of 5 days until expiration. So if they delay it until next week, what will probably happen if they delay it? Prices will stay right where they are, right? So they will not fluctuate a whole lot. And that's what I'm betting on. So if they then stay within this range over the next few days, we should be fine. Again, what I'm looking for is, so that you see the exact idea, before earnings, usually there's uncertainty and volatility is high because uncertainty means high volatility. As soon as there's certainty, this is where volatility goes down. That's what we're experiencing overall in the markets right now, right? I mean, this is why the VIX is going down, because there seems to be more and more certainty of what impact this virus has on the economy and so on. But great question. Great question. Okay, Mohammed is asking a great question. Why not buy a call out of the money and a put out of the money in options that expire in 1 to 2 days and have no earnings? Because usually there's not much premium in there. You see, when you're selling option, you want to have high volatility. When you're buying options, you want to have low volatility. So if you would just do it randomly, I don't think that there's enough premium in there. So I want to make sure that I'm maximizing my premium. Does this make sense? Okay, but great question here. Let's see. Somebody asking, what application are you running the black screen? The black screen. This is one of my accounts. It's on Interactive Brokers. I promised you that I will open an account probably this week or early next week where I can maybe trade this strategy. So many of you asked me about Webull. So I want to look into them, or TD Ameritrade. I don't know yet. So we'll see. Let me know in the comments. With whom do you want me to open an account? With Webull, who are right now the new kid on the block and seem to be the rave. A lot of people are really saying good things about Webull, and I quickly glanced at their website and I kind of like what I see there. So would you like me to open an account with Webull or with TD Ameritrade? Leave a comment and let me know. And I'll take it into consideration, but I can't promise you that I follow your lead. But I'm just curious, what do you think? All right, Dermot says, I was thinking the same thing with selling puts and calls. Took a TEDx class, hey, good, 2 weeks ago and have been killing it. I have all wins. I made 5 figures in 2 weeks. Congratulations, that's awesome. Loving it. That is fantastic. Yep. So exactly, and this is why I'm inspired by this, and I know that you have been asking me about what about selling calls? When do you do a class on selling calls? I don't know. When I have the rules. And again, right now, it's just an idea. Okay, Don is asking, Don Bosco, are these rules for selling options in the money or out of the money? Out of the money. And again, no rules, just an idea. Right? We're good? Just make sure. It's only an idea. Okay, Cathy sounds very interesting. Gives us an option around earnings. Exactly. Because, earnings season is once a quarter. And right now, we're in earnings season swing. So I want to take advantage of this. So I want to see what we can do next week or even this week. All right, so let me go to the other questions. I really appreciate you being here, hanging out with me, having coffee with me, and spending 30 minutes, 45 minutes together on a beautiful afternoon. I don't know what about your part of the world. Here in Austin, Texas, it is 82 degrees. It's a super pleasant day. Really nice. I'm overlooking the lake here right now, enjoying life. Okay. So Nick says, how does a strangle work? It's basically selling a call out of the money and selling a put out of the money. Okay, Derman, love this idea of sell calls and puts at earnings. The day before earnings has the highest implied volatility. Exactly. So that would be the day to sell the options. That is my plan. I mean, really super short fuse, maybe a day or two before, but Derman, you're absolutely right. This is what I thought as the highest implied volatility, and that's when you want to sell it. Okay, good. Zia says, selling calls is very dangerous because of the unlimited loss potential. I'd been in trouble for doing that once. See, I agree. Selling options is dangerous. You have a limited reward, and theoretically, you have unlimited exposure. But the unlimited exposure is if a stock after earnings runs away like crazy. I looked at it, even Snapchat, which last week jumped, 10%? Let's actually take a look at this together because, yeah, it's a great, you're making a great point. So let's say Snapchat. Let's say we were in Snapchat and, geez, here, we would get in the day before earnings and you see the next day, boom, it is moving higher. So let's say based on the very rough ideas that I have right now, I might have sold, let's say, probably a 15 call. And then it goes against you and goes all the way up there and goes to 17. So this means that you would lose $200 per one option traded. But you see the next day, right here, the next 2 days, it already comes down to $16. Here, can you see it right here? On these 2 days, we already at $16. So this is when you can probably get out with $100 loss. So I don't think it's necessarily bad. And I believe, Zia, I believe that I can be right 8 out of 10 times. So if you do the math, let me do the math here on the screen really quick. So here's my idea. Actually, I'm going to take my handy dandy notepad, and I want to show you the idea that I have here. So let's do the math. So here are my assumptions, and again, these are only assumptions, subject to test. This is why I'm testing it right now. So the goal would be per one option, and this is where I want to say per one option. So the goal would be to make probably, I think I want to shoot for $75 per one option. And then if I'm getting in trouble, okay, so let's say if I'm getting in trouble, I'm assuming that I might actually lose $300. Let's just go crazy. I've just shown you in this example here with Snap that it probably would have been around $100, but let's go crazy. let's say we lose $300. Now, you have seen the probabilities when I showed it to you on the platform. So right now I am looking at trades that have an 80% probability of success. Now, of course, you never know what happens, but the idea here is that 8 out of 10 trades will be profitable trades. So let's do some basic math. 8 times 75, how much is this? No math. No math on stage. So 8 times 75. So the idea would be to make $600 here. Okay, and then the 2 times 300. Okay, that doesn't make sense. So that doesn't work. I'm glad that we are doing the math together, don't we? So I need to find a way. That's really good. I need to find a way either to make more money on my winning trades, or let me erase this here for a moment, or to reduce my risk on the losing trades. Okay, so that's good to know. So I probably should actually go for $100 on my winning trades and try to lose 200 on my losing trades, because when I do that, let's just see if the math now works out better. See, this is why we're doing it together. I don't know everything yet. I mean, this is why we are testing it. So 8 times $100 would be that we make $800. 2 times $200, because that's what we want to lose here right now, would be $400. So we would still have, make this in blue, a profit of $400. Okay, so now you know, now I know what to shoot for. So I should probably try to get $1. Yeah, I should probably try to get $1 here for every option that I'm selling. And then I should find a way to limit my losses to probably $200. Okay, now we know. Let me come back to you full screen. See, now I used my phone, which I usually use here as the control, so that I can come back to you. Okay, so we need to make sure that we find a way to do this. This making sense? So great comment here. Great comment. Okay. Interesting. So a lot of you say, let's do TD Ameritrade. Wayne says, Webull has terrible customer service, takes an hour to get through and speak with someone. Okay, good to know. I see a lot of TD. Money says both, TD and Webull. Maybe we do both. Johnny says, we love interactive brokers. That's where I currently have accounts with. I want to do it with something else. Okay, Dermot says, Qualcomm just announced earnings. Stocks is up 4.5%. Okay, great. Let's go back to the screen here for just a moment, and let's take a look at Qualcomm. So, QCOM. So right now they're up at $80. Ugh, okay, big deal, right? So post market they're at $81. So we would still be safe. This is why I like to go for a rather high out of the money here, right? I mean, choose a strike price of 85. I mean, let's see. Let's keep an eye on it for the next few days. If Qualcomm will stay below between these two lines, the 85 and the 71, then we should be good. I should have written down how much money I would have gotten in this trade. I believe it was $50 or something like this. Okay. Good. See a lot of votes here for TD Ameritrade. Calop says, why not both? Might do that. Might just do both. And maybe put 10,000 each in there, or 20,000 each, something like this. Good. All right, Petrana is asking, did you see the price for USO? I did not. What happened with the USO today? Let's just see. Oh, dear Lord. Wow. So they had the reverse split, right? And then they do a reverse split. Because USO, I believe it was already trading at $2 or something like this. Then they did a reverse split. And yeah, I mean, as crude oil is going down. See, crude oil, we actually would have to go to CLM. I believe I have it here. This is better. See, as crude oil is going down, USO is going down. So yeah. Ouch. But let's see. I mean, that's why they did the reverse split, so that they can stay in the index and hopefully going back up. We'll see. Calop says TD still charges commissions. Yeah, I know. 65 cents per option contract. So I'll look into this and I'll let you know. Anyhow, so Cathy says, excited to hear the strategy and rules for the idea. I mean, let's see if this is a valid idea. Because honestly, if we can't get to the point where we have the odds in our favor, I mean, this is when the same will happen to us that happened to Zia. If we can't put the odds in our favor and find a way to limit our risk, then we would have a problem. And I don't want to have this. I want to have a winning trading strategy, not a losing strategy. Okay. Good. And so let's see if there's any other questions. I mean, Claire's, I love that you're talking to each other. That is fantastic. Dionne is asking, what do you think? Is it smart to buy stocks for the weekend instead another report comes out about the vaccine? I don't know. This would be highly speculative for me, and I would not do this. As you can see, I like to trade what I see, not what I think. This is why I work a lot with charts. I work a lot with numbers. I mean, you have seen me. I'm a numbers guy. I don't trust my own judgment here, and so I don't trade what I think. So therefore, I'm not planning to load up on shares. I'm looking forward to Friday, because this is when some of my options that I traded for this new trading idea will expire, and I can keep all the premium. So I might close it out early tomorrow. We can do this together if you want to. If you want, we can close out some option trades together and hopefully put some money in the account around this trading idea. Okay, I know my coffee, I'm already feeling my cup here. I know that my coffee is getting cold. So it's time to wrap it up here. It has been a little bit more than 45 minutes. Shh, don't tell anyone, because I'm planning to keep it to 45 minutes so that we can have a coffee together. Hope that you enjoyed today's session where I showed you how I go from trading idea to trading strategy. If you enjoyed this, do me a favor and click on like. And if this is your first time here and you thought, wow, I want to learn more and want to know what else is happening here over the next few days, consider hitting the subscribe button and hit the little notification bell. This way you get notified whenever I go live or release a new video. And also do me a favor, get another copy of the Kindle. I mean, let's really, I mean, we're already number one. What am I saying? It's okay, you don't have to buy. But the special price that Amazon allows us to set is valid for the next 3 days until Friday, May 1st. And then on May 2nd, the price goes up to $4.99 again. Until then, it's $1.99. Anyhow, have a great rest of the day, and I'll see you here tomorrow. Same place, same time at 3:30 Eastern Time, 30 minutes before the markets close. Have a great day, and I'll talk to you soon.